Hi, this is Michael Rony Mullick, and you're watching the pre-market show. And let us look at how the US markets has closed yesterday. And we were seeing US markets trading in the positive territory, but thankfully it has ended in the positive, but not significantly. But it is almost flat, is what we can see. So things are all right. We are seeing S&P 500 up by 0.29 percentage. Then we have the Nasdaq up by 0.28 percentage, and Dow Jones also up by 0.18 percentage. So nothing significant, but still the US markets have ended in a positive territory after falling for the last 3 days. So that is good for our markets as well. So we will definitely have a gap up. US futures are also positive by 0.3 percentage, all of them, and so things are looking good. In Asian markets, the Hong Kong and Chinese markets are down today. Hong Kong markets are down almost 1.2 percentage, and Chinese markets are slightly down by 0.18 percentage. But uh, Japanese markets are up 0.56 percentage, and Korean markets are up 0.8 percentage. So so overall, you can say Asian markets are kind of mixed. So going forward, we definitely have to watch out for uh, what is the gap up. So SGX Nifty is indicating 17,750 as an opening, so that indicates almost 150 points gap up for our markets. But in the last few days we have seen that SGX Nifty, whatever it is shown, our markets are not opening with that much of a gap up, so maybe we can expect 17,700 as an opening level for Nifty. So still that's 100-point gap up, and people who had sold a lot of call options yesterday, if you can see that intraday build up, a lot of call have been sold from 650, 600 and above. So these people might fall into trouble, and that can propel the markets even higher. So the markets ended for the second day in a green candle. So so right now, if the markets open around 17,700, there's a gap to be filled, as you can see. Upside 17,800 should act as a resistance, and then 17,850, and finally 17,900 in the worst case scenario if there's a massive short covering. Apart from that, on the downside, we can expect 17,635 to hold as a support in case the markets are falling, and last 17,500 to 520 is the level of support I'll be watching out for. In case that is broken, we will go for further bearish move today. So chances are high that after opening a gap up, market might come down a bit and then consolidate for the rest of the day. That is that could be a very the chances are high for that happening. Coming to Bank Nifty, if Nifty opens 100-point gap up, Bank Nifty can open around 238 points gap up, and Bank Nifty had already had a pretty good couple of days. Maybe today it can consolidate a bit. 39,400 and above, we will consider going bullish, but 39,400 should act as a resistance. So markets may touch this level and then come down a bit and touch yesterday's high of 39,000, and then it can consolidate for the rest of the day. So below 39,000, we can expect a further bearish momentum towards 38,800 or 38,750, and if 38,750 is broken, 38,600 is broken, we can expect further bearishness in Bank Nifty. So most likely it will be a range bound day, but with big moves happening on both directions like the last few days have been. So that is Bank Nifty for you. And coming to other things, the crude oil prices are actually higher. It has been going higher and higher. Now it is at 95.52, and Brent crude is already at 101. So things are going to be interesting to see. Definitely Reliance Industries, ONGC, these will be positively affected, but the paint sector, Berger Paints, Asian Paints, and then we have sectors like automobile sector, and then also cement sector. These sectors will be negatively affected because of rising crude oil prices. So keep an eye out for those stocks and sectors which will be negatively affected from the rise in crude oil prices. And apart from that, you can definitely watch out for Nifty IT index. For the last 2 days, you can see it did not recover. All the other sectors recovered well, but IT sector was lagging behind. But today, since the Nasdaq opened in the positive, opened in the green, and closed there as well, so definitely IT can outperform today, and finally it can move up. So IT stocks, TCS, Infosys especially, keep an eye out for them. You can find intraday opportunities in those stocks as well. So that is the overall view of the market. Monthly expiry, so like I said, things are going to be volatile because already we are expecting a gap up opening. Talking about economic activities, the GDP growth rate of Germany is going to be announced at 11:30 a.m. and expectations are 0% growth, and if that is the case, if it comes negative, then it is again a panic situation for the market. But if it comes positive, again it's a good thing for the market. So definitely keep an eye out for this data, because we have seen the German data is actually affecting the markets in the recent days. Last Friday's fall was because of Germany's producer price inflation data going up. So this can play a significant role today as well. So definitely keep an eye out for this. This will be affecting the markets because it is going to happen at 11:30 am, which is within market hours. And after our market hours, we have the US GDP growth rate coming out, and again the expectations are negative 0.8% this time as well. So we have to see how the US markets react to that, but that will be affecting the markets tomorrow. So we can talk about that in the post-market show. So currently the GDP growth rate of Germany is what you should be looking out for during today's trading. So I think we have covered most of the points, and let us hope the expiry goes well for everyone and the hour series comes to an end. And thank you for watching. Have a very good day.